welcome. You're watching Buy Now Sell Now on ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And viewers, this is the show where we get you answers for all your stock-related queries by the experts. In a short while from now, we'll connect with them. But before that, let's have a look at what the markets are up to. So Cheryl, finally, all the green coming in for the benchmark indices and even the broader markets are quite supportive today.
Absolutely, Shrishti. If you look at the way how the markets are panning out, a healthy start coming in for the benchmark indices, positive cues coming in from the global markets as well. Remember the fact that you had S&P 500 as well as Nasdaq, both of them end near the 13-month high levels. So yes, that sort of optimism is trickling down for our markets as well. So right now, if you can see, Nifty Bank holding on to good gains, about 0.4%. You also have Sensex and the Nifty also holding on to good gains. You have Nifty that is trying to surpass that 18,700 mark as well on an intraday basis. Let's talk about what are the broader markets doing at this point in time, whether they are moving in tandem with the benchmarks. Once again, broader markets are outperforming the benchmark indices. Remember, for 11 straight sessions, the markets or Nifty is moving in a very, very tight range. This also despite inching closer to those record high levels. But talking about the list of gainers then is the consumption pact that is actually at the forefront today. You have Asian Paints, Titan, HUL, Tata Consumer, all of them among the top gainers on the Nifty. Add to the list Axis Bank as well as ITC. But on the flip side, you have Kotak Mahindra Bank, M&M, HCL Tech as well as Hero MotoCorp that are declining in trade today. But what's key to note is the fact that the list of losers, none of them are losing more than 1% in today's trading session. So all of them are seeing declines less than 1%. Let's talk about what are the sectoral indices doing then in today's trading session. And you look at the sectoral indices, all the sectors are in the positive territory. The one that is leading from the front is Media Index, that is trading higher by about 1.5%, followed by FMCG as well as Pharma Index. So that's the way how the markets are looking like at this point in time. Definitely a good day, a healthy day, just initial hours of trading session. Hopefully we are able to sustain these levels, Shrishti.
Well, yes, absolutely. Let's watch out for those levels. But for all our viewers, unlock a golden opportunity with ET Now on our 14th birthday. Here's a gift for you, wherein you can participate in ET Now's Force of 14 contest and stand a chance to win 14 gold vouchers. On our 14th birthday, all you have to do is to watch ET Now throughout the week. Give us a missed call on 888-665-9273 and grab the golden chance. Today's the third question, and that goes that what's the name of the market closing show on ET Now? The options are close trade, close call or closing trade. And the D option is closing bell as well. So amongst the four options, select your answer and give us a missed call on the number flashing right on your screen and win a chance to win a gold voucher on ET Now.
All right, moving on then, let's put the spotlight on BNS and Lens segment. And today on BNS and Lens, we are going to talk about the OMC counters, that is oil marketing companies. With Brent crude prices still near multi-month lows, is there a case for OMCs to go ahead and cut retail fuel prices? Remember that they've been largely unchanged since April 2022 when the Brent prices were near $100 per barrel levels. Samit is here to explain if there is a case for OMCs to lower the retail prices. If they do so, what sort of an impact will it have? And also what other factors are driving the gains for the OMC stocks at this point in time? Samit, over to you.
Well, if you see the retail fuel prices, that is the petrol and diesel prices, they are unchanged since April 7th. On April 7th, Brent crude prices stood at close to $101 per barrel, which has now come down by around 29%. But petrol and diesel prices are largely unchanged. Whatever change you are seeing here of 8 and 7%, that is because of a reduction in excise duty. But the core petrol and diesel prices continue to remain unchanged. Why is this happening? Firstly, in ideal scenario, petrol and diesel prices should have changed on a regular basis because petrol prices were deregulated since 2010, while diesel prices were deregulated since 2014. Now, why prices are not changing? Because oil marketing companies have suffered huge losses. If you see in the first half of FY23, because crude prices were at a high and petrol and diesel prices were remaining unchanged. Now, according to an oil minister, the petrol and the oil marketing companies incurred a loss of close to 27,000 3,300 crore rupees. So how is this unchanged retail fuel prices actually aiding oil marketing companies? Well, it is aiding the marketing business because the gross marketing margin is at a record high. Now, if you see on sale of every liter of petrol and diesel, the oil marketing companies are earning close to 9.9 rupees on petrol and 5.2 rupees on diesel. That is on the first quarter of FY24. Similarly, in the previous quarter, that is Q4 FY23, the profits on sale of diesel was stood at close to 2.3 rupees, and that on petrol stood at close to 9.6 rupees. But before that, if you see, there were losses on diesel and petrol, and to recoup these losses, oil marketing companies are keeping petrol and diesel prices unchanged despite a sharp drop that we have seen in the Brent crude prices. So when can fuel prices now start changing? Well, it's difficult to give a timeline on when the petrol or diesel prices could start changing, but let's look at the micro scenario that could at least give us an idea of when it could start changing. Firstly, if you see, the CPI has cooled off to a 25-month low, so inflation is not a problem as of now. Demand is also not a problem despite high prices because there has been robust demand. In fact, in the month of May, if you see, fuel demand was up nearly 10% on a YOY basis. Also, there is no state elections till December 2023. Now, usually in past, we have seen that whenever there are major state elections or general elections, petrol or diesel prices cool off, but that is not happening till December 2023. Also, as per analysts, oil marketing companies would need time till September 2023 to at least recoup the losses that they have incurred in FY20. So this gives us at least a fair idea of when petrol and diesel prices could start changing. Now, apart from the fact that there are not oil marketing companies are earning higher gross marketing margin, there is one more positive factor, and that is on the refining front. Now, despite the fact that the global GRM, that is Singapore gross refining margins, are subdued, the gross refining margins for Indian oil marketing companies or oil refiners would still be at record high because they have been importing Russian crude. Now, as per May, nearly 42% of India's import was from Russia, and Russian crudes are available at a cheap discount, which is thereby further aiding the refining margins of these oil marketing companies. Also, the valuations of the oil marketing companies are still at a 5-year low. Now, Indian Oil Corporation's 12-month forward valuation stands at close to 6.4 times as against their 5-year average of 6.5. Similarly, for BPCL, the 12-month forward valuation is at 8 times, while the 5-year average stands at 9.2. And for HPCL, the 5-year average is at 5.8, while the 12-month forward is at 5.6 times.
Thank you so much, Sumit, for highlighting what all factors are at play for all these OMCs, because we are seeing all these counters buzzing in the recent past, as well as how the valuations are stacking up right now. But with this, viewers, let's also listen to what is the editor's take, that is Nikunj Dalmia, ET Now and ET Now Swadesh managing editor's take on all these OMCs going ahead.
See, why do you like OMCs? OMCs in 2022, they really had to bear the entire burden of high oil prices. Government did not increase the fuel retail prices, even though in theory, fuel prices in India are completely deregulated. There was a compulsion because government had to control inflation. But now that oil prices have reversed, the question you got to ask yourself is that even though oil prices have reversed, have the fuel retail prices come down in the same quantum? So let's go back to that graphic again. I just want to establish that point, and we are coming right back here. Yeah. Look at the drop in Brent and look at the drop in petrol and diesel. This is again still not enough for some of the oil marketing companies to recoup their losses. Why? Because the total losses they have, next page, is about 27,000 crore. The sense what we get is that even though crude prices have gone down, government in a sense is not looking at reducing the oil prices or fuel retail prices because the losses are really high. Now, at the retail level, the margins are positive, which means in the current quarter, there would be a very large divergence, what you would see at the PAT level and at the profitability level. Gross margins also, if you really look around the trend right now, they've also been quite favorable. And the stocks are cheap. The PE multiples are completely smashed. These are stocks where you know that you may actually see a cyclical rally rather than a commitment towards long term. What has influenced fuel prices in the medium term are always two compulsions. What's happening on the geopolitical front? Luckily, the issues on Russia versus Ukraine, Russia and Ukraine, that's behind us. The world is settled now. And B, there are no large state elections till December. So there is no political compulsion and there is no compulsion globally. So if oil prices stay where they are, these are cheap stocks, and I will not be surprised that the momentum which some of these stocks have discovered, it may just carry on for some more days.
All right, that's the take coming in from the managing editor of ET Now and ET Now Swadesh, Nikunj Dalmia, on OMCs. But let's ask our experts, what should you do with OMC? Should you go ahead and buy in case you've not already ventured into them? And if you already ventured, then should you repose your faith in these counters? So let's bring on board Rajesh Agarwal as well as Kunal Bothra. Very good morning to you, Rajesh, as well as Kunal. Thank you so much for joining us on ET Now. Rajesh, let me come first to you. OMCs, do you think that they are a buy right now? No doubt they are not gone ahead and they have not increased or reduced their retail prices in line with what the movement has been with the crude oil prices. What's your take on where are these stocks headed fundamentally? Do you think these companies now merit a buy?
Good morning, Cheryl. Good morning, Kunal. I think one can still buy OMC stocks, despite the fact that in the last 10-15 days, they have gained some, gained some. Because of the fact that if you look at crude prices in January 2022, they made a high of $116 versus $80 in Q4 and $72 now. And that's a huge, huge fall in crude prices, I would say. And that has led to improvement in marketing margins. Cumulative net profit of OMCs in the both quarters has gone up, although HPCL has reported losses. And we believe that at least June quarter would be better than Q4. And second quarter also is likely to be better. Despite fall in crude prices, companies have not reduced their petrol and diesel prices. Demand is up, and the integrated margins in marketing segment are reaching all-time highs now. As per media, the government, I have heard a lot of news that the government is insisting in reducing the prices, but no decision has been taken as yet. And I think even if the prices are reduced, they would be marginal and that would be taken care of by the company. So we would prefer going ahead with IOCL and BPCL. Both are good on valuation terms and even dividend yield for IOCL is very good. So these two are preferred picks up.
That's the fundamental take coming in from Rajesh on all these OMCs. Hi, very good morning, Kunal. What's your take on all these OMCs counters? Because last week we had a bit of a negative news flow and all these stocks reacted negatively. But because the trend has been upwards for all these OMCs in the recent past, and some of them are also giving some breakouts. So any of the counters that you like at this point in time for a fresh buy maybe?
Good morning, Srishti, Cheryl as well as Rajesh. So, there are two parts to it. One is that when you're managing a portfolio, when you're creating a portfolio, there is, very strong likelihood that you may not be looking to invest in all of the sectors. So, I think that's one part, and I believe in that regards, possibly that many of the portfolios may not have stocks like from the OMC pack. Now, but then the second part is that if there is a compulsion to buy the stock from the OMC pack, then I think the best stock which is there on the charts is IOC. The stock has been looking very strong on the charts. In fact, it's been the more resilient ones as compared to the likes of BPCL as well as HPCL, which have been in the thick of news flow time and again. IOC has been one of the stocks which has consistently given signs of breakout, and those breakouts have been very subtle, slow, gradual for IOC over the medium to long term, and they've shaped up quite well historically. So if there's one stock which I have to pick from the OMC pack, I'll go with IOC.
All right, so that's the take coming in from both of our experts on the OMC pack, and IOC's preferred bet coming in for Kunal. But with that, let's kickstart taking all of your stock-related queries. Remember, viewers, this is a show where you can get your answers for all of your stock-related queries. You can write to us on the WhatsApp number that will be flashing on the top of your screen. Do mention your name. Also mention the stock that you're already invested in. If you've not invested in, also mention the stock that you're looking to invest in. And if you've invested, mention the buy price, the quantity, as well as the time horizon that you're looking to hold a particular counter. That will help our experts help you better. And talking about experts, we have Kunal Bothra as well as Rajesh Agarwal on the show. And let me take the first query that is coming in by Ghosh Dada. And he wants to know about CG Power. He's holding it at around 16,000. He's holding around 16,000 shares at zero cost. He wants to know whether he should keep adding on or adding onto this counter on every rise, and also any view on Jain Irrigation. Both of these queries I'll take to you, Rajesh.
See, as far as CG Power is concerned, we are very bullish despite the fact that it has run up quite a lot in the recent past from 300 odd levels to 380 odd levels. I think there is a lot of time left considering the fact that the numbers are good, the company projections for the future launches are very good. I think this stock can reach 440, 450 odd levels in the next 2 quarters. So I would suggest not to hold the stock and not only hold but even add if his uh, uh, financial position allows him to. And as far as Jain irrigation is concerned, considering the fact that the numbers are very poor in the past, I don't think there is any point in adding to that stock. It's just avoid from our side.
So that's the take coming in on CG Consumer and Gen Irrigation. But Kunal, coming to you for the next question. It's from Korean and he's holding two counters. Firstly, is 35 shares of Lux Industries from a price of 2,462 rupees. And the other is 600 shares of Vedanta from a price of 346 rupees. What he's highlighting that he also got good dividend from Vedanta. And going ahead, should he continue to hold on this or both of these counters or sell at these levels?
Okay, you can continue to hold on to Lux. I think the stock is going to a mild recovery. Over the last 2 months, the stock has recovered, I think 20%, 50 to 20% from its previous 2 month, 3 month swing lows. So I think there could be a chance of maybe another 10 to 15% kind of a rally. That's where you can probably take a double check whether you'd want to continue to hold on to the positions or not. Vedanta, I would be a bit intrigued because I think the stock has been an underperformer. Yes, it's paid heavy dividends over the last couple of times, but then the recent charts in terms of pure technicals is nothing exciting. I think a better chart from the entire metal pack is actually JSW Steel, the stock which I think is now at 740, 750 plus levels currently. So I think that's a better chart and higher probability that that stock can sustain as well as give you decent returns on the upside.
All right, another one coming your way, Kunal. This one is from Anjali. She's a senior citizen. She has 50 shares of Aarti Industries at 535 rupees per share and about 200 shares of AB Capital at 165 rupees per share. What should be her strategy in both of these counters? As far as I know, that AB Capital is the counter that you've been bullish on. You did speak about it in the morning as well. But also for Aarti Industries, what should her strategy be for both?
See, I'm not sure if you're looking to hold on to Aarti Industries for some more time, but if that's not the case, frankly, the stock has been just languishing at this range of 500, 550 over the last many months, which means that the stock has been underperforming and it's going through its own spate of issues. So I think a better bet could be that if we can shift that capital from Aarti Industries to AB Capital, that would actually be a better bet because AB Capital is a performing stock. The stock has been doing reasonably well. It's gone through mild phases of pauses, corrections, consolidation, but it's made a very good comeback time and again. So that's a sign of a stock which is looking quite attractive. I would suggest to make that switch from Aarti Industries to AB Capital.
Okay, Rajesh, coming to you for the next one. SV Shalam has shared 4 stocks and he wants you to pick any of the preferred picks amongst them. What all he's looking at the counters from the broking and the AMC sector. He has Angel One, ICICI Securities, AB Money, as well as Aditya Birla, Sun Life, AMC. These 4 counters are in his mind for a fresh buy. So any of the stock that you like at this point in time?
See, I would not suggest any one of them, but still somebody insisting on going for these stocks only. ICICI Securities stands out. But instead of going for these counters, I would say go for a AB Capital or a Bajaj Finserv on the NBFC space. Those are better bets than going for these counters.
Okay, this one also is coming in from a senior citizen, Mr. V. Mathur, writing to us from Delhi. He's a long-term investor, so he looks to hold on to his positions for 3 years plus, Rajesh. He's already holding on to Dabur, 800 shares at a price of 543 rupees per share. He wants to know whether he should stay put with Dabur or look to exit this one and go to ITC or L&T or any other preferred pick in that particular segment. What's your take coming in? Should stay put with Dabur? He's making a mild profit on his holding.
So one has to choose between ITC and Dabur. I would always go for ITC. That's a fact because on all parameters, it's a better bet than what Dabur is, despite the fact that it has run quite a lot, maybe 200% from the past lows from where we started recommending. But Dabur is also good with rural economy started showing signs of improvement. I think Dabar is going to show good numbers. Agro, with the focus of government in agriculture and other things, and not to forget elections in the near future. Dabar can easily touch 580, 590 odd levels in the next 2 months. So one can stay put with Dabar. But if somebody wants to switch, I would say ITC would be a better bet.
ITC is still the preferred bet among the FMCG space. But Kunal, the next question is on Yes Bank. The question is from RK Jalan, and he's holding 51,000 shares of Yes Bank from a price of 16 rupees 45 paisa. He says that can he get and expect a price around 18 in the near term to book profits, and how do you see that?
Well, yeah, I think 17.5, 17.4 is something which you can expect as a near-term target for Yes Bank. That's been the zone, I think, twice in the last 2 months, two and a half odd months, that the stock has tested this level and it's retraced from that zone. But again, I think the question is that whether you're looking out for consistency, whether you're looking out for just a short-term trading, or whether you want to build in good returns from your banking portfolio. So I think in that regards, Axis Bank, IndusInd Bank could be much more better bets. Even the likes of HDFC Bank, I think over the next 1 to 2 months could deliver some great returns. That's what I believe. So possibly shifting from Yes Bank towards other names could be actually a better bet if you're looking at it from a portfolio point of view.
All right, that's the strategy that one can adopt. But on that note, we'll slip into a break on this edition of Buy Now, Sell Now. But unlock a golden opportunity with ET Now on our 14th birthday. Here's a gift for you. Participate in ET Now's Force of 14 contest and stand a chance to win 14 gold vouchers. On our 14th birthday, all you have to do is watch ET Now through the week, give a missed call on the number flashing on your screen and grab the golden chance. And today's third question is, what's the name of the market closing show on ET Now? And the options are slated on the plate on your screen. Give us a missed call and answer the questions correctly.
Welcome back. You're watching Buy Now Sell Now on ET Now, a show where we get you answers for all your stock-related queries. And continuing the same, Kunal, coming to you for the next query, and this one is on Birlasoft. His name is Tushar, and he wants to know that can he enter into Birlasoft for a swing trade? Is this a good time to enter? And what should be the target on this one?
Well, yeah, I think it's a good time to enter Birlasoft. In fact, it's just come out of a major correction from 550 levels to 250. The stock had corrected over the last one and a half odd year, and from 250, it's just recently come back into momentum at 337. So what it could probably do is it could spend some time over here at this 330, 350 odd range. But if you can try and buy this at the lower end of the range, the risk reward would be very fruitful for you. So I would expect Birlasoft to get into a league of outperformance. Specifically, the mid-cap IT names have been doing exceptionally well as compared to large-cap IT stocks. So that should also be a good indication that Birlasoft can stand to outperform. Buy this on dips could be a better strategy.
All right, this one is coming from Suresh Babu, who also is a senior citizen. Kunal, he wants to know about data patterns. He has about 120 shares at a price of 1,747 rupees per share. What should his strategy be in this one?
See, it's a good stock, limited history, but then I think you seem to have bought at the higher end of the price curve for data patterns. That's the only concern. Now, the stock has this tendency of coming closer to its 50 DMA after every, I think, one and a half odd month. That's a zone where the stock generally consolidates, ends its correction, and then resumes an uptrend. So I would sense that if a similar opportunity is available for data patterns for you, say over the next 1 to 2 months, and assuming if the stock say comes back towards 1600, 1650 mark, that could be a point where you can look to average further. So try and buy this closer to the dips and then wait out for the stock to outperform or get into a league of outperformance rather than buying at the peak and then waiting for the stock to get into a league of outperformance.
Okay, moving on to the next question, and this question is on Ultratech Cement, and Rajesh. Suresh from Kerala is holding 20 shares from a price of 8,142 rupees. What we are seeing in this particular counter is the stock is sitting at its life high levels, and if you will see, Suresh is also sitting at a mild profits in this particular name. So at this point in time, should he continue to hold on or book profits?
See, if there is no requirement of fund or paucity of time, I think one should continue to hold. It's one of the largest capacity in cement with we have witnessed cement stocks going up. There are a real estate sector is moving up. So I think cement stocks are going to do well. Ultrasec Cement being the largest capacity and a market leader. We are hopeful that the stock can touch 9,500, 9,000 odd rupees in the next 12 to 18 months. One should continue to hold.
All right, this one is coming in from Satya and he wants to know about a non-expensive defense or an infra stock that he can look for investment for the long term. Rajesh, non-expensive is the key word here.
So it's very difficult at this point of time to find a non-expensive stock, but still considering the kind of order book these companies are getting, the new orders, I think BEL or Hindustan Aeronautics can be a good play, but Hindustan Aeronautics has jumped quite a lot in the recent past based on certain corporate action news. So I would say wait for some time, maybe 3,400, 3,300 would be a better level to enter.
Okay, Rajesh, once again coming to you because this particular query is from Vishal and he wants a long-term view on two counters. Firstly is Poonawalla FinCorp and the other one is Syngene International. Any of the counters that you like for a fresh buy at this point in time?
See, if one has a time horizon of 2 years, 3 years down the line, I think Poonawalla is the best counter to be. It's growing very well, moving into retail finance. They have spent quite a lot in technology also. They've spent out their housing finance business. And the numbers every quarter have been very good. AUM has been going up like anything. I think one can go ahead and buy Poonawalla FinCorp for a longer term horizon. Don't look at daily price movement because after such kind of run up, there might be some kind of consolidation. But for a longer term horizon, it's a very good buy.
Right, Kunal, next one is coming to you from Sunny and he has 50 shares of Adani total which he purchased at a price of around 685 rupees per share. He wants to know what should his strategy be with this particular counter. Should he stay put with Adani total or what sort of strategy should he adopt given the fact that he's actually bought it at a substantially lower price given the elevated levels Adani total was trading at, isn't it?
Yeah, but you also have to understand that the stock is trading at its lowest price because the market feels that the stock is, still, in a corrective phase. So it's not that you've bought at a cheap price; it's because the market believes that this could probably be a fair price for the stock, at least over the near term. I would believe that it's better to exit the stock. I think it's trading at just about closer to your cost price. I think a better bet from the even if you look at it from the Adani group of stocks, then I think something like Adani Ports, Adani Ambuja Cements could be better bets at current levels. If not, then if you to shift to some other sector as such, then few of the stocks which you've been recommending earlier, AB Capital, PFC, etc. These are better bets which you can consider at current levels.
Okay, moving on to the next query, and Kunal, this one is from Sandeep, and he has bought Tata Motors from a price of 450 rupees, and ITC, which even Rajesh was preferring for. Sandeep has the stock from a price of 330 rupees. Wants to know the outlook maybe for the next 6 months and what is the outlook on these, and as well as should he continue and add more on some dips?
So I think so. For both of the points, that holding on to Tata Motors and ITC, yes, of course, it makes sense. You've bought them at I would not say very cheap prices, but then you've bought them at reasonably good prices where you have built in a good buffer for both of these stocks. So that's a very good point for you that you can continue to hold on to the stock. Now you can also look to add these stocks on phases of sharp corrections, and specifically at a point where these stocks they come back closer to their key medium-term moving averages. For example, 50 DMA, like what we saw for ITC. I think a couple of weeks back from 445 levels, the stock had come back towards 420, 430 odd mark. Those are good points where you may look to average further. So rather than buying these stocks more on momentum, it's always beneficial to buy these stocks when they retrace to their medium-term moving averages.
All right, and let's not forget that ITC was one of the stock where there was a consensus buy coming in from both of our experts for over 2 years. Both Kunal and Rajesh have been screaming out from their respective terraces here in Bombay for Kunal, and for Rajesh it was from Kolkata. So they've been saying for the last 2 years there is definitely a buy for ITC, no doubt. Right from those levels, you've seen how the stock has climbed higher, also touched near 500, Kunal? 450. Okay, hopefully it will touch 500 very soon. But let's move on. Let's take the next query then. And this one is coming from Dinesh, writing to us from Nagpur. Usha Martin is the counter, 1,000 shares at a price of 235 rupees per share. He's been holding this counter for the last 2 years. Rajesh, do you think it merits a hold for some more time, or should he look to book profits?
It's been good. The company is trying to come out of their past problems, like production has gone up. But still, I would say book partial profit, maybe 30-40% of your holding, so that your acquisition cost comes further down and continue with the rest.
All right, that was Usha Martin for you, and the take coming in from Rajesh. Let me take this one coming from Denny. He's writing to us from United Kingdom. Kunal is holding Ashok Leyland call option 148 at 5. And he has 5 lots of that. He has Tata Steel call option 105 at 4. Both of them are June expiry. He wants to know what's your take on both of them.
So Ashok Leyland, you can continue to hold on. Possibly, I think I've not seen the current price for the option, but I would probably expect that you're sitting in decent profits on Ashok Leyland. Tata Steel, I would be a bit circumspect because the stock is still not given any major indications of an outperformance or a breakout on the recent charts. Yes, it's been doing reasonably well over the last couple of days, but then it's still trading below its major resistances of 113, 115 mark. So you can consider to hold on to Tata Steel and expect in that whenever the stock breaks out this 113.15 mark, we could expect a strong surge of momentum for Tata Steel as well.
Okay, moving on to the next question, and this question is for you, Kunal. A viewer of Kanan from Chennai wants to know your view on Rajesh Exports. Can he buy this particular counter maybe for a 1-year time frame?
No, I would not recommend a buy for Rajesh Expo. I think the stock has been a big underperformer, even though the volumes have shot up for Rajesh Expo in the last 3-4 months. But there is no visible sign of price rally or any change of major change of trends in terms of indicators. So that would also make it a bit more preemptive to try and expect that the stock would rally up higher. So I think it's better to wait out for a confirmation. As of now, it's not there, so would not suggest a buy.
Okay, this one is from Renar Carvalho, and a tricky question coming in from this from Renar is the fact that wants to know whether it makes sense to buy Glenmark Life or Gland Pharma for investment in the longer term. She's asked me to ask this question to Kunal, but given the fact that Glenmark Life just listed, I will take this question to Rajesh. Glenmark Life and Gland Pharma, among these two, which one is a better investment for the longer term?
Long term, I would say avoid to both at this point of time, because as far as Gland Pharma is concerned, we have seen the numbers going back to worse in the recent past. The stock has corrected from 3,000 odd levels to sub-1,000 levels, and I don't find any reason to believe that it's going up from here. Maybe a dead cut bounce is there. And as far as GLS is concerned, the numbers are not that good at this point of time for a long-term horizon. But yes, these research companies take time to show some improvement. But still, I would say avoid both at this point of time. There are better bets in pharma space. Maybe a Cipla or a Dr. Reddy's would be a better bet. Even Divi's could be a better bet.
Okay, moving on, and Kunal, the next question is from Kusuma from Pune, and she wants to know, is this a right time and the right price to enter into Kotak Mahindra Bank, looking for the next 6 months to 1 year investment horizon? What's your view and the target price on the same?
Well, I would not recommend Kotak Bank as the first priority in terms of the banking names. I think as of now, it's Axis Bank, IndusInd Bank, which are looking very strong from the large cap private sector banking names. And then HDFC Bank as well as ICICI Bank. They are the second ones in terms of price performance, which could be bought into. Kotak Bank, I think, has been a stock which has underperformed for the last 2.5 odd years. And I don't expect any kind of a major recovery, which could probably happen first in Kotak Bank as compared to the other names which I just mentioned. So that's the reason why I would suggest or give preference to the other names rather than Kotak Bank at current levels.
All right, on that note, we'll actually slip into a break on this edition of Buy Now, Sell Now. But viewers, here's your chance to unlock a golden opportunity with ET Now. On our 14th birthday, here's a gift for you. Participate in ET Now's Force of 14 contest and stand a chance to win 14 gold vouchers. On our 14th birthday, all you have to do is watch ET Now through the week, give a missed call on the number flashing on your screen, and grab a golden chance. And today's third question is, what's the name of the market closing show on ET Now? And the options are on your screen. Do give a missed call on the number mentioned and stand a chance to win a gold voucher.
Welcome back. You're watching Buy Now Sell Now on ET Now, a show where we get you answers for all your stock-related queries. And continuing the same, Rajesh, coming to you for the next question. This question is on Jubilant Pharmova. The viewer name is Raja, and he wants to know that can he buy 100 shares of Jubilant Pharmova at the current market price? His investment horizon is for the next 5 years.
See, one can buy this stock. This stock has underperformed quite a lot in the recent past, and the valuations at this point of time have become reasonable. One can go ahead and buy with a target of 450, 460 in the next 1 year or so. For 5-year horizon, we need to check numbers every quarter and the kind of performance. But for the next 1 year, 450, 480 odd levels is quite a reasonable target.
All right, a couple of queries, Kunal. Even yesterday, we had a lot of them ask about IEX. Today, also, you have a lot of them repeat the similar queries on IEX. We have Mohit, who wants to know whether he can buy IEX at this levels. Also, not only Mohit, you also have Shrinu from Vijayawada, who's already purchased IEX, about 300 shares at a price of 140 rupees per share. Wants to know whether to hold, exit, average, what sort of a strategy should one adopt if they've already invested in IEX at a little elevated cost than what it is currently at.
See, I think you can just continue to hold on if you've bought at higher levels, because till the time there is no clarity in terms of the news which had come out for IEX, the stock would continue to remain into a downtrend. But definitely do not add at current levels, because this is the time of uncertainty for the stock, and it's been trading with a very vicious kind of a price action on the downside. So you don't want to catch a falling knife. In case if the news flow deteriorates further, then there is always a high possibility that the stock may continue to correct a bit more steep. So I would suggest not to average or add at current levels.
Okay, Kunal, the next question is from Lester Joseph De Cruz, and he is holding two counters. Firstly is over 3,000 shares of CESE from an average price of 77 rupees, and the other is over close to 7,000 shares of Samvardhana Motherson from an average price of 76 rupees. Wants to know the outlook and should he book profits in these counters right now or continue to hold on maybe for the next 1 year?
See, for CESC, you can look to maybe book out profits at slight higher levels. I would not say at 72, but maybe at 75, 77 could be better levels to book profits. But for Samvardhana Motherson, I would expect a big breakout for the stock. In fact, it's been one of the recommendations over the last 1 to 2 months where I've been highlighting that this stock is due for a big breakout. It started to show signs of reversals at 80 plus levels. I think the momentum is just started off for the stock. I would believe that possibly in the next 1 year, the stock can even try and retest or scale past about the 3-digit mark. So I'm extremely bullish on the stock over that kind of a time frame. So in my suggestion, I would recommend to hold on to Samvardhana Motherson.
Okay, this one is coming from Poonam Anand. Kalyan Jewelers 150 shares at a price of 111 rupees per share. Not mentioned whether what horizon she's looking at, but given the fact that the stock is very close to the buy price, Rajesh, what the strategy should be for Kalyan Jewelers? Do you think that this is a good bet to stay put if you want to stay put for a horizon of at least 1 to 2 years?
I think so. One should try to get out of the stock, maybe switch to better names like Titan if you want to be in a jewelry sector. Otherwise, I would say get out of this stock.
Okay, Rajesh, the next question is on Bajaj Finserv. Viewer named Mali has bought 2,000 shares of Bajaj Finserv from a price of 1,400 rupees. Is this a good time to book profits in this one and rather make an entry into HDFC Bank or ICICI Bank?
See, if you have a long-term horizon, you don't have paucity of time or any need of fund, I think you can continue to Bajaj Finserv. It corrected from 1,800 odd levels to these levels. It's a holding company of Bajaj Finance. Apart from that, it holds into two of the insurance ventures, housing finance company. They have recently launched their mutual fund AMC also. Everything is good. The NBFC business is doing well. NPAs, asset quality is very good. NIMs are on a higher side. I think one should add Bajaj Finserv at these levels for a longer term horizon.
All right, this next one is coming in from Sarabjit Singh, writing to us from Punjab. And Kunal, 7,000 shares of Dhanlakshmi Bank. He's mentioned the fact that he's holding this counter for the longest period of time. His buy price, an average price is 40 rupees per share. A massive wealth erosion coming in for him on this particular counter. What sort of a strategy should he adopt? Does it even merit to stay put with this particular stock right now?
See, you can stay put for the stock right now, but then I think maybe the stock had shown a rally in 2022 second half when I think it had jumped up to 25, 26 levels. Those are strong phases of rallies where you can actually look to reduce your holdings or start to exit the stock prices. I think that's a better strategy for a stock like Dhanlakshmi Bank, and then shift on to those traditional PSU names and the larger cap names, Bank of Baroda, Canara Bank. Even in that time span, over the last 4 to 5 years, as well as over the last 3 to 6 months, these stocks have been better performers. So it's always better to stay with the leaders or the amongst the top three names from a performing sector. And I think in that regards, you should make a switch from the Dhanlakshmi Bank towards the likes of Bank of Baroda, Canara Bank, etc. over the next maybe couple of months.
Okay, but talking of leaders, Kunal, HDFC Bank has also been on your radar of late, and the viewer name L. Sarma from Hyderabad is holding 110 shares of HDFC Bank from a buy price of 1,620 rupees. It's been 4 months into this particular counter. What's the likely movement expected going ahead, and what sort of target she should be looking at?
So, over the last 1 or 2 months, I think major part of the reason why HDFC Bank was actually underperforming was because, there was not too much clarity in terms of the news flow regarding the, merger. But now I think with that, declared maybe in a month's time, the selling for HDFC Bank should stabilize quite significantly. So my belief is that we could now be in a process that maybe over the next 1 to 2 weeks, the stock may show signs of bottoming out and then possibly a sign of uptrend which may come back into HDFC Bank. So I would suggest to hold on to the stock. And even if you're a long-term investor, I think it makes a lot of sense to hold on to the stock otherwise as well.
Okay, Kunal, one more your way, and post that I'll take next query to Rajesh. But this one is coming from Arvind Reddy. He's writing to us from Hyderabad. He's saying he's already booked 75% profit in NCC. He had it at around 126 is I think where he's booked the profit. He's asking whether he should go ahead and book some more completely out of it and look to invest in Zomato at a price of around 67 rupees per share. What's your take coming in on exiting NCC completely and looking to invest in Zomato at a price of 67? We know right now it's much more elevated than those levels. What's your take coming in? Because I feel a lot of them are feeling the FOMO is coming in for Zomato right now.
Well, yeah, the FOMO seems to be coming back, for these stocks, and I'm not sure whether the stock would immediately come back towards 67, and if in that duration NCC rallies up higher post to exiting the balance 25%, that could be the bigger question because the capital would remain idle. So it always makes sense to do the switch immediately, whenever that happens. So yes, you can look to buy Zomato in case if it comes back to 67, say in a very short period of time, that could be an advantage for you. But otherwise as well, I think as a first priority, I think NCC is what you can look to book out full profits. In case if the stock say comes back towards 123, 125 mark, that could be a better level to book out full profits.
Okay, moving on, and let's kickstart the rapid fire session. And the first question is for you, Rajesh. The query is from Venkat Jala, and he's holding 1,000 shares of Mangalam Drugs from a price of 60 rupees, sitting at a good profits right now. Is this a good time to book out profits or rather stay invested? And if book profits, then any other alternative?
See, one can book profit in Mangalam Drugs, switch to better names like Cipla or DP Plan.
Okay, Kunal, best IT stock to invest in right now, Ramamurthy from Bahrain is asking.
HCL Tech if you're asking from a large cap point of view.
Okay, the next question is on Ambuja Cements. Rajesh Pradeep is holding 40 shares of Ambuja Cements from 371 odd rupees. What's the target going ahead? What's the outlook? Should he continue to hold on or book profits?
One can even add to the stock. Going ahead, we believe that 20% return the next 1 year is quite possible.
Okay, Srikanth from Chennai wants to know about Schaeffler India. Kunal, can he accumulate at current levels for the next 1 to 2 years?
Not really. Don't track the stock, so I'll give it a skip.
Rajesh, one more cement counter. Krishna has bought ACC 10 shares at an average cost of 2,633 rupees. Is this worth holding? Should he continue to stay put?
Yes, one can continue to hold. If Ambuja moves, the entire cement pack moves. This also will.
Okay, Kunal, Divya has 3 PSBs where she's suffering huge losses. Bank of India, Union Bank, Bank of Maharashtra. Which one of them you think she should exit?
I think you should continue to hold on to all three of them.
Kunal, can Subrata Mukherjee buy Granules or Symphony at this point in time for a short to medium term outlook?
Granules could be a better bet.
Mohan from Hyderabad wants to know about Eicher Motors. He's already been holding on to this counter. What's your take? Rajesh, for more 2 years, should he stay with this one?
Yeah, one can continue to hold.
Okay, Rajesh, Padma is holding Orient Hotels from a price of 82 rupees and Lemon Tree at a price of 78 rupees. Continue to hold on or make a switch?
One can continue holding to Lemon Tree. Oriental Hotel, one can book it up.
All right, and with that, we come to the end of the rapid fire as well as queries. Thank you so much, Kunal, as well as Rajesh, for joining us on the show. And with that, viewers, this is goodbye from Shrishti, myself, and the entire team who put the show together. But stay tuned, Markets at Noon is coming up next.